Hello and welcome to today's NinjaTrader ecosystem event, Risk to Reward Trade Management. My name is Thomas and I'm a platform representative here at NinjaTrader. Now, before we start the webinar, I have a few housekeeping notes. Now, this webinar is presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. Brokerage-related questions should be directed to the NinjaTrader brokerage team using the phone number or email on the screen. And if you are new to NinjaTrader, please make sure you sign up for a free NinjaTrader account, which includes access to 14 days of complimentary real-time market data. Our platform is always free for advanced charting, strategy backtesting, and trade simulation. You can create your free account by following the link on the screen and then clicking Get Started under the Welcome section. And before I turn over the mic to John Paul, it is important to understand that futures, foreign currency, and options trading contain substantial risk and is not suitable for every investor. It is possible to lose all or more than one's initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. For more information or for the full CFTC risk disclosure, please visit the following link. And please remember that these training sessions are not a solicitation or a recommendation, but simply educational in nature. Now, again, thank you for joining us today. And without further ado, it's my pleasure to welcome to the NinjaTrader webinar room, John Paul.
All right, everyone. Thank you. Thank you, Thomas. Thank you, NinjaTrader, for having me today. My name is John Paul, founder of DayTradeToWin. Today, we're going to cover how risk and reward and trade management is so important for us as traders. Now, if everyone can hear me, you can type a yes there in the chat box just to make sure everyone can hear me loud and clear. I will be answering questions as the webinar continues. I don't want you to wait until the end. If there's a question, please type in your question there in the chat box. All right, for those of you who don't know me, my name is John Paul, founder of DayTradeToWin. We focus on price action software, indicators, trading systems. And before we begin, we're going to cover the disclaimer. Remember that trading is risky. As we know, everyone should be trading with funds you cannot afford to lose. If you have any questions on the risks of trading futures, stocks, options, whatever you trade, please be very careful and ask questions before you jump in. It's very risky. Now, what I want to cover today, and I'm limited in time, I want to cover many things, including price action. I want to cover how long to stay in a trade, the measurement of price action in comparison to time. I also want to cover something that's very important, which is the 50-50 rule. And some of you may or may not know this. I have a lot of traders that already understand because they're in our programs, but I want to make sure that for the new traders, you understand a little bit of risk to reward when it comes to the 50-50 rule. I also want to understand and teach you about entries, because if you can enter at a better price, if you can enter without slippage, this is really the way to go. So instead of just clicking jump in at market and hoping it's going to go in your favor, let's take a moment and understand the signal, understand if we can get in at a better price, understand the risk to reward ratio. Just give yourselves a minute, maybe even 10 seconds just to see what's happening before jumping in. That's really important. What about adjusting targets and stops? Well, I absolutely adjust my targets and my stops. I don't always use the same target and the same stop for every trade in every situation. It really does depend. So as traders, we have to be dynamic and we have to adjust based on the current conditions. So I want to touch on that a little bit so you understand that it's not always going to be 6 ticks and 12 ticks or 8 ticks and 20 ticks. If you see the market stronger or slower, understand that and then take the appropriate action. What about profit target multiples? So many traders come to me and they say, I just don't want to scalp. I want to go for a larger profit target. So I'm going to show you that. Actually, I'm going to use the Sonic system to show you how we can increase are profit target multiples that make sense, not just guessing, well, I want to go for 10 points today or 20 points or maybe just 3 points. Let's have an understanding of what those profit target multiples are and more importantly, why. All right, so again, for those of you who don't know me, my name is John Paul. I'm a founder of DayTradeToWin. For probably 15 to 20 years, I've been teaching traders about price action. It all started with the at the open method, and then it continued with the Atlas line and the Trade Scalper and the Blueprint, the X5. So all of these methods that I've developed over the years focus on price action. I don't think that using moving average crossovers or using MACDs or stochastics or anything that is conventional is really beneficial because there's so many different types of variations that we try to optimize. So let's stay away from trying to optimize these conventional indicators and let's focus on just the time, the price, the targets, and the entries. And that's basically what price action in the basics of it is really is. Now, as far as the markets, they've evolved. They aren't the same markets as we've seen even 3 or 4 years ago. Markets are always changing. So I want to explain to you and show you how the markets are changing and even now in 2025, how we can take advantage of the changing markets, whether the market's slow or fast. I'm going to give you a few examples of that. Now, we offer proprietary software, and if you don't know anything about Day Trade to Win, we have hundreds and hundreds of videos out there of the methods in action with our students. So please, I encourage you to visit daytradetowin.com, learn a little bit more instead of just jumping in to this game of trading, and also get a free member account, which you can get a free member account at Day Trade to Win. Now, most traders, when they come to our programs, they really don't know what they want. They don't know if they want to scalp. They don't know if they want to swing trade. Maybe they want to be an investor. Well, I want to break down what it means between being a scalp trader, a swing trader, maybe a long-term investor. And for some of you, you may already know the type of trader that you want to be, but I want to explain what each of these methods have in common and how they differ as well. Now, scalp trading, if you're interested in getting in and getting out multiple times a day with typically smaller profit targets and smaller stops, scalp trading is what you want. Now, scalp trading doesn't mean that you're going to sit at the computer all day long and click buy, sell, buy, sell. That's not at all what scalp trading should be. It still should only be maybe 5 to 10 times a day getting in and getting out, and then really stopping and pausing for a moment and asking yourselves, am I up for the day? Am I down for the day? Am I at break even? What is the market doing? So a lot of traders think that scalp trading is all about 100 trades a day where you're constantly trying to just get a tick or two. And absolutely not. That is not the idea of scalp trading, at least the way that we do it. We want to go for maybe 4 to 8 ticks, which is a good point or two on the E-mini S&P. Now, if you're trading the NASDAQ, that may be a little bit more, but it really does depend on time and it depends on how volatile the market is. So scalp trading just means trading a few times a day, not over trading, obviously, and keeping the targets and the stops smaller, not going for a home run, going for the small in and outs. Now, swing trading is a little different. So swing trading is where you're using a possibly a larger time chart. So maybe you're using a 30-minute chart or a 15-minute chart. You're maybe just trading once or twice a day. You're looking for a large target, not necessarily a larger stop, but you're looking for a larger target. And what you're hoping to do is once you enter, the market's going to continue and continue in your favor. So if you bought the market, you're anticipating that's going to continue for most of the day, if not until tomorrow, the following day, it's going to just continue in your favor. So swing trading is not for everybody because if you hold a position overnight, whatever broker you're using holds and has to have a higher margin. So just remember that if you're swing trading, if you're holding positions overnight, there are different rules to that. Scalp trading, on the other hand, you can get in and get out in the same day. So There's a difference between how these are allocated. Now, what about combining methods? If you're interested in scalp trading and you're interested in swing trading, and maybe you have a few methods that you're already using, or you want to add some day trade to win software, you can combine the methods. And combining them really means that if you have a signal to go long, and that signal to go long is also coinciding with another method or strategy, also telling you to go long. And maybe you have two or three methods that are all telling you to go long. If you see that, obviously that should be a higher probability trade because every method is indicating the same direction to go long. And in that case, you can hold the position a little bit further, a little bit larger profit target. So when you combine the methods, you have a different opportunity there. Also, when you combine methods, you can filter out trades. And I do that a lot as well. When we look at filtering trades, I want to make sure that there's nothing that is contradicting where something is long and then something else is saying short and then something else is really confusing. That's when you hold back and you wait until it becomes clear. Now let's take a look at a few of the charts. I'm going to show you a lot of different opportunities and charts. Going to explain to you everything that I've just talked about, the ATR and multiples and all that. So conventional indicators versus price action methods, they are different. So price action, again, based on time and price. The conventional indicators use history, and they use history with some value, right? Moving average crossover, MACD values, stochastics, momentum. So there you have to adapt a value to it. So we never know what kind of value we should use as the markets are always changing. And why traders fail to adapt, I don't know, but you have to adapt in different scenarios. Markets fast, trade accordingly. Market slow, trade accordingly. Maybe you want to increase the target when the market is faster. Maybe you want to take a smaller target when the market is slower because it takes longer for the market to reach where it needs to be if the market's slower. So, what to avoid when trading? Well, when you look at the news at 10 o'clock New York time or the FOMC at 2 or 2:30 or even at 8:30 when we have news events, you have to be really careful that the news event isn't going to ruin what you're about to do. So, what to avoid when trading? Avoid trading during news events, maybe give it 5 or 10 minutes. Avoid the first maybe 10 minutes of the day, could be chaotic, and also avoid the last 20 minutes or half hour of the trading day because there's a squeeze on day traders. So if you're trading on margin and you have to get out at the end of the day, everybody else has to get out at the end of the day as well. Remember that everybody's forced to exit the market right before the market is closing. And if you're in a trade at that time, it can get really chaotic. So avoid the last 20 minutes or so of the day, avoid the first 5, 10 minutes where it could be higher volatility and the news events as well. Now, as we look at this chart, this is a 1 minute chart, E-mini S&P, which we have most of the traders that we work with. There's a lot of traders that also trade the NASDAQ, so you could substitute this for the NASDAQ. But we're just looking here at the E-mini S&P. That on the left-hand side is called the news indicator. And I mentioned earlier that if you want a free member account at DayTradeToWin, you can download this news indicator for free, as well as the ABC course and the ABC indicator. We give that whenever you join our free member account. So you can download some free software at DayTradeToWin. Now, looking at this chart, a lot of traders look at this and they don't really know what to do. They don't know when to buy. They don't know when to sell. You can look at it in history and say, sure, I would have sold there and I would have bought there. But in reality, it doesn't work that way. We all know that in the heat of the moment, we have to make that decision whether the market's going to go up or whether the market's going to go down and then take action upon it. But looking at this chart, there's really nothing here that tells me what to do. Now, the same exact chart, this is the roadmap software. And what you're going to notice is that these zones, whenever the market lands in the zones, I'm not sure if you're able to see my pointer there, but if you are, right at the bottom there, it says roadmap long 60, 94, 50. This indicates an opportunity to go long. So again, if I go back to the previous chart, there's nothing really here that tells me what to do and when to do it and what candle to do it and at what price to do it. But using something like the roadmap, which is price action based, when the market lands in the roadmap zone, it reversed and gives me the opportunity as a reversal. The same thing happened here towards the end of the chart on the right, where 60.9950 indicates to go short. Now I'm showing this example because if you're about to go long against this signal or against the zone, you could very well get caught and get trapped and see the market reverse just as you're going to be a buyer or to go long the market. So the focus of this roadmap software, and every software we have is unique, but the focus really of this software is first as a filter, not to go against the zones until it goes through it. The second part of this software is to take advantage of it once it reverses, or if it goes in the same direction, just blows through the zone, then we can say the zone isn't holding. So I'm going to show you some examples of that as well. That's without the software, and that's with the software. So you can see that this tells you exactly what to do and at what candle and what price. Now, this is what the free member account access looks like. When you visit this page, create a username, password, and you have access to the news indicator, the ABC course, and the ABC software. So this is what it looks like when you visit the Day Trade to Win member account. All right, let's switch to a live chart here. Here we have, if everyone can see my chart, this is a 1 minute chart. This is today. These are my trades for today. I actually did a video on this as well, which has already been updated to YouTube as well, which means that this is not after the fact and it's not market replay, recorded live, posted within the hour after the trades were taken, and you can see them live if you would like to. Now, what I want to focus here is on the risk to reward ratio of every trade and how this is really important, and also with the Sonic system, cover the profit targets and how those multiples play out. So I'm going to just focus here for a second here. 1 second here. Okay. So if you take a look at this trade right here, you can see that the entry to go long is 61.21. And the distance between the target and the distance between the stop is about equal. And that's when I refer to the 50-50 rule. What is that all about? So when you take a trade, any trade, it doesn't have to be with the Sonic system, but any trade, if you know where your target is and you know where your stop is, there's a lot you know already. You know what your loss will be if it's a losing trade. You know what your target will be if it's a winning trade, how much money you're going to make on it. You also have this opportunity to get in at a better price. So when it comes to trade management, the first thing you should look at is how much am I making and how much am I going to lose, and is it worth it? In a situation like this, it's worth it just on the basis of you're trying to make at least the same amount that you're willing to lose. Now, a lot of traders that I work with, they even go 60-40. They're willing to lose 60 to make 40, but I wouldn't really go too much further than that, especially if you have a system that's not high probability. If you have a high probability system, then it works great. So first thing is risk to reward. This is about 50-50. Another example here, from here to here, this is the target. And remember, the green dashed lines and the red dashed lines are created by the Sonic system, and it gives it to you. So as soon as you enter into, as soon as the signal appears, I should say, the target and the stop is there for you. And you can take a minute and pause and say, there's the target and there is the stop. Is it worth taking this trade? And the same thing here. Here is the entry. Here is the target. Here is the stop. So you can see this specific example here. The uh, target is a little smaller than the stop. If you see that, you may even say, you know what, I'm going to skip it. I'm not going to jump in on this because it may be, if I lose, I'm going to lose more than it's worth it. So think about that when you enter into a trade, this risk to reward ratio. The second thing you can do when it comes to trade management is really try for a better price. Now, in the last, I don't know, maybe 30 or 40 videos, I'm always mentioning use a limit order, try for a better price. You're going to hear me say that over and over again. And the reason why I say that, I'm going to just expand this out here a little bit so everybody can see really clearly. You can see that this is the entry and the market did not make the target, but instead I placed the limit order a few ticks better than the actual signal. And so what that's called is being smart. You're not using the exact signal because maybe the risk reward ratio is not really what you want. You're entering on a limit order, which means there's no slippage. You're entering at a limit order at maybe 3, 4 ticks, a point, 2 points better. So you're entering at a better price. And that's really important because you can actually choose at what price you enter. You have this entry here to go long at 60. Let me just unlock it here at 61, 1550. You have this entry that's telling you, but you don't have to jump in at market orders. You don't have to rush into it. I always say, take a moment, take a few seconds. Where's the signal? Where's my target? Where's my stop? Place your order a few ticks better if it's worth it and enter on a limit order. That's really important. And the same thing is true here. You can see that this signal appeared. I entered at a tick better. So it's just a tick, but a tick is $12.50. It pays for the commissions. The same thing is true here. You can see this is the entry, and here is the actual entry on the very next candle. I placed it a tick better to enter into the market. And the same thing here as we continue here. And you can, by the way, you can see all of these trades live on YouTube or on the DayTradeToWin blog later today. Here is the entry to go long. So this is now a different situation. Here is the entry, the signal provided, and if we look at the target and the stop, it's about equal. You can eyeball it, but I entered a good 2 to 3 ticks better. Now, I don't know, and nobody knows how far the market's going to retrace for a better entry. So the reason why I say a few ticks better, because typically the market gyrates back and forth and you can get a few ticks better. So I don't know it's going to come all the way down to here, but I do know that this is the signal, 2 or 3 ticks better gets me here. So think about that for a minute. If I enter here, my stop is smaller, my target is bigger. So consider where you enter into the market in comparison to the target and stops. Anyone have any questions on that? Oh, I do see a lot of questions here. Sorry, I didn't see your questions here. Does it work? Simon says here, does it work on the Forex and the Euro? Yes, it does work on the Forex and the Euro because this is based on price action. I'm going to show you the back end here of the software. And here's another trade here. I'm going to show you the back end of the software in just a minute, but let me show you here this signal here. This signal here to go long. If I entered at a better price here, my stop is still the same. And if you get stopped out, you're immediately out of the trade with a smaller loss. So there's again a benefit to getting in at a better price because your loss is smaller. We can't eliminate every single loss, but we can eliminate how much of a loss that we have on any specific trade. Now, in this case, this is about 4 or 5 trades, right? So we have one, two, three, four or five trades here. Okay. Now, in reality, if you're up for the day after 3 trades, after 4 trades, I really don't recommend that you continue and trade and trade and trade. Eventually, you're going to have a loss. When you have 1 or 2 winners in a row with the Sonic system, typically it means that the market's continuing in the same direction, and it's a higher probability that the next trade or 3 or 4 trades in the row in continuation will be in your favor. So I want to consider not really taking the first long or the first short, but if you see one trade that's a winning trade in that's a long, it was winner. The second trade is a winner. I would say the third or fourth trade, as we continue maybe in the trend or the market's strong in that same direction, we're going to continue in that. So all that is has to be taken into account, and we teach this as well. Let me take a look here. Some other questions here. Hey, Jose. Simon, Sonic's been used for about in beta testing for about a year and a half and just recently released, Simon. It's not automatic trading, Joe. Joe is a member at DayTradeToWin. It's not automatic trading. You have to press the button on your Dome or on your chart trader using a limit order and then use the ATM strategy from NinjaTrader to automate the targets and the stops. So what we call that is semi-automated. When you place a trade, you can see it on the videos too, Joe. You can see that once I enter into the trade, I then adjust up or down the target and the stop using the ATM strategy. So just the chart trader properties and enable the limit order with X number of ticks pullback to accomplish what you described. You could do that. I don't do it automatically. I do it manually, Jeffrey. So when I see a signal, I see the signal, I immediately just automatically try for 2 ticks better, at least 2 ticks better. But before I do, I want to make sure that the target and the stop isn't really upside down, where you may have a stop that's so far away. Let me show you the back end and you can understand this a little bit better. So when I look here at the back end here of the software, there's only a couple of settings. I mentioned earlier about multiples of the ATR. So when you take a look here at how the profit targets are created, they're created based off a multiple of the average true range. And so for those of you who don't know what the average true range is, average true range or the ATR looks at the last, and I only use 4 candles, and that's why you see here a period of four. The last 4 candles, the most recent example and the most recent information. And the last 4 candles will probably tell you what you can expect moving forward within the next 4 to 8 candles. So if the average true range, and I'll add here the ATR here, right? ATR. Remember setting a 4. If you don't have this, I definitely recommend that you go to your NinjaTrader and add the average true range with a setting of 4. Click templates, click save, and then save as default. And the reason why I'm doing that is because I want to make sure that this never changes. Defaulted is 14, and the period of 4 is what I use. So now when I click apply, we're going to see down here the ATR. So if the market is slow, again, looking at price action, if the market is slow, then I know the market is slow because the next 4 to 8 candles can move about 2 points. If the market is fast, so if you take a look at an example when the market is fast here, you can see over here that it's 6 points. So as a dynamic trader, you're adjusting the targets based on how slow or how fast the market is. Now, you don't have to do that because the Sonic system does it for you automatically. So as an example, I'll just crunch this up. This happens to be yesterday, I believe, or this morning. So you're looking at the signal, the targets are larger. The signal, the targets are larger. The signal, the targets are larger because the ATR is larger. So what we look at here in the back end of the software is what is the multiple that you want to use for your target. The stop doesn't change, and that's the good thing because we're always using the same stop. I recommend a setting of 5 for the stop loss. And really what that means is 5 ticks below this shaded box or 5 ticks below this or above. If you're going long, if you're going short, it's just 5 ticks above or 5 ticks below, really depending on the direction that you're trading. So that's what that means. But this is really important. If you're a swing trader and you want to trade for a larger profit target, so let's say that you want 2 times the ATR. So when I click apply here and OK, what you're going to see is the targets are larger because now it uses 2 times this value. Or I'll do it again. If we say that I want to have 5 times the ATR, so you're really having less trades, you're waiting for the market to go much further distance. And so you can see that this is a much larger target. Okay. So in a situation like this, here's a good example to show you. If you're more of a swing trader or you want a larger target, here is the signal to go short. The stop is still the same. The target is incredibly large. So if you had a stop earlier and a small stop or a break-even trade, this will more than make up for it. Now, I'm not pushing you in either direction. Some traders rather take 3 or 4 trades, get in and get out and be done. Some traders just want one trade like this that will be finished. The one thing I am going to say that it takes longer, and this is where we talk about time and we talk about price, how long it takes for the target to be hit. It takes longer for the market to achieve this distance if you're looking for a larger target. So if you think about a time-based stop, I talk about this a lot because I don't want to stay in a trade for an hour or 2 hours. But if you're looking for that larger target, then obviously you have to hold on to the trade until it gets to that target or the stop. So you have to hold on to a position longer if you're looking at 3 or 4 or 5 or 10 times the ATR, which I think is a lot. But in this case, you see from here to here, just as an example, what this trade would have accomplished would be $637. Okay. As opposed to maybe just making $100. This is 5 times the distance. So that's how we can improve, if you wanted to, a larger profit target based on multiples of the ATR. Now, we can actually change this around. We can change this around where it could say, let's say that you wanted half the ATR. So think about that for a minute. I gave you an example of 5 times the ATR, but what if you just wanted a snippet? You just said, I just want to get in and get out maybe a few times a day, and you want to use half the ATR. What you're doing here is you're looking for a very small target and a very small stop. And every time you get in, like for example here, you're immediately out. As soon as you get in here, you're immediately out. As soon as you get in here, you're immediately out. So the targets are really small because you're only using half the ATR. So you can absolutely make this your own system, whether you want a larger target, smaller target, whether you want a better price. You can move the stops. I don't recommend much more than the 5 ticks above the box, which this is like that right there, right? So the stop shouldn't really change. What changes is how you enter and the target, like that. Okay. Let's take a look here. Daniel, 3 months. All right, Simon, chart trader, properties. Okay. All right. So this is using the Sonic. So now we're going to change this up here a little bit. And oh, and by the way, if you wanted, those of you who have the news indicator, this is how you are able to access it. Once you download the news indicator into NinjaTrader, you come here to where it says here, the Day Trade to Win suite of indicators. Maybe some of you have the ABC or the Blueprint or the Atlas line or the At the Open, but we're going to come here to news. And once you click on news here, you can see that here live is the news events that are upcoming in the future. And this prepares you and it gives you an audible alert if there's some type of news event that may impact your trades. Remember, they usually happen at 10 or 10:30, and also the FOMC at 2:30, New York time, that is. Okay. All right. So now let's switch gears here and let's take a look at the roadmap. So this is the roadmap. This is today. Again, completely different. We include the Sonic system as well as the roadmap and the Atlas line and the At the Open 2 and everything if you're interested in mentorship. So we have here this signal. Now, really what this means, I'm going to just focus here on this signal here for a second, right here, this signal right there. What this means is that if you're trading with a moving average, you're trading with momentum, you're trading with MACD, and it tells you to go long because at some point this is all telling you to go long. But yet immediately it reverses. Now, the way that this works, again, completely unique, doesn't use any conventional indicator. It looks at whether or not there's profit taking happening right at these levels. And so if you have profit taking, the way that I like to describe it is when you enter and you're accumulating a position, you're accumulating a position, you're accumulating, and then when it comes time to exit, you're dumping. and you're getting rid of all of your positions as fast as possible. And so for the little guy, you and I, we don't really know when this is going to happen. But if you have something like the roadmap, it warns you not to go long. So let's say that you are right here, you're about to go long, and then it just reverses. Now, the opposite is true. You can see that as it goes down, you're say, okay, well, the moving averages have crossed to the sell side, I'm going short. But when profit taking occurs, all those short sellers are now going to buy back and exit their position, which creates a huge amount of orders in the opposite direction, which is now going to run you over. And that's the purpose, the main purpose of the roadmap. Now, when it goes through the roadmap, you can say, well, the zone isn't holding, and so you can go short from here to here. But then it immediately reversed. So I want to take a look at how the market is moving. I want to filter out trades. I'm using the Sonic system. I'm understanding whether or not my entry makes sense. So my entry, meaning the target and the stop, that ratio of 50-50. Now, when you also talk about trade management, how long to stay in a trade is dependent on your profit target. If you just want one times the ATR, definitely by 15 minutes, 20 minutes, you should be out of that trade. There's no reason for you to not be able to get out of that position if you're using a 1 minute chart, one times the ATR. But if you're looking for a much larger profit target, it takes time for it to get there. So if you're looking at two or three times the ATR, you have to say, well, it may take longer, and I'm going to hold on to this position. You see, in this case, the market, nothing happened. You buy and you exit once it hits the zone. You buy and you exit once it hits the zone. And then what happened? Reverse. So again, this is today. I'm not cherry picking any of these moves. This is a trade that happened today here. Once it hits the zone, don't go long until it breaks through it. So this is the roadmap software. We have a lot of traders using the roadmap to filter out trades and for signals. And we have a lot of traders now using the Sonic system. Now, with the Sonic, I really want to stress about over trading because you see a lot of signals here, a lot of signals. But if you have and you're trading just one contract, after three or four trades, absolutely stop. Give it a moment, maybe come back tomorrow or later on because you will eventually give some of that back. It happens to everybody. It happens to me. I'm not immune. I see all these signals. I want to take them, but we have to try not to overtrade. So after you see one, two, three, four, five signals, then we have a loss. You're giving back. So I think that when it comes to uh, taking trades, be disciplined and don't overtrade. Okay. Let's take a look here. If you right here, Gene says here, if you're looking at the two trades on 1 minute, notice the first two trades did not give a chance for retracement. Do you just let it go? Absolutely. So it's a great question, Gene. When you have a situation where it just takes off, let's say you see a signal and the market's so quick, maybe it's the beginning of the day or it's strong or volatile, there's no chance for retracement. The goal is to have a better price, enter in a limit order, and then let it go, either target or stop. If it just takes off without you being able to get that retracement, let it go. If it hasn't hit the profit target, you can wait. But if it hits the target, you're out. So another example here would be something like this. So you see this here, and I think I may even have left this in the half the ATR here. Yeah, so I'm going to put this back to one. You can start off with one times the ATR, which is normal, or 90% of the ATR, or two times the ATR. But here, just click OK here. If the market just runs away from you, you see a signal and let's say it does not retrace, right? So you see here, it gave you the opportunity for maybe a point better. I only want two or three ticks. But if let's say it just goes straight down, hits the target, it's over. Wait for the next trade. We have a lot of trades. So I'm not even concerned about missing. We have a ton of opportunities here. So without jumping into every trade, risk to reward, limit order, make sure that you're entering at a better price. Don't hold on to a trade for hours on end. Maybe this is another situation that you're referring to, where you see the signal, absolutely did not retrace, ran away, let it go. So what? You missed the trade. At least you didn't lose money. And that's what I'm more focused on. Gene, you understand? Questions on that, Gene? Anyone have any questions? All right. So as we wrap up today, I only have a few more minutes left here. What I want to do is give you guys an opportunity to get the Sonic system or join Accelerated Mentorship, but at a discount. Use the code NINJA20 for 20% off. That way, you'll be able to get some of this unique software at a discount. If you don't have a free member account, get a free member account at daytradetowin.com. Start watching the free training videos. We actually have videos, tutorials, how-tos on how to use NinjaTrader, how to apply the software, how to use price action. Focus on price action for sure. Understand risk to reward, practice, and then when you're ready to start, start small. Start with the micros because the micros allow you to get a feel for how to trade, how to um, set the targets and the stops. If you make a mistake, obviously mistakes are going to be made, but if you make a mistake, it's not going to destroy your trading account because you're only going for a small target and a small stop. So start off with the micros and then graduate to whether an E-mini or a NASDAQ mini, and then you can increase the number of contracts. But I always want everyone to practice first and then start small. Okay. Anyone have any other questions on NinjaTrader, on the Sonic, on the roadmap, or on joining mentorship? Oh, and we also, I forgot to mention, we have a live trading room. So everything that you're seeing here with the roadmap, the Sonic, we have in the live trading room every day, Monday through Thursday, and Fridays is just dedicated to training. We have separate hours for that. If anyone has any questions, support at daytradetowin.com. I'm going to hand it over to Thomas at NinjaTrader. Thank you, Thomas. And I'll see everyone at the next webinar.
All right. Well, thank you again to John Paul for taking the time to share with us today. Everyone in attendance today will receive an on-demand recording of today's event, so keep an eye out for that email. If you enjoyed today's session, we hope you will join us in future webinars. Follow us on social media for alerts about upcoming events and other NinjaTrader ecosystem news. We would like to remind you that the information provided was that of DayTradeToWin and not of NinjaTrader. All information was for educational purposes and should not be construed as trading advice. Enjoy the rest of your day, and we hope to see you in future webinars. Happy trading from all of us here at the NinjaTrader ecosystem.